Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Welcome to Voro, where we dive into the world of finance and bring you the latest news and analysis. Today, we're discussing the recent 3-day slump in the Dow Jones Industrial Average and what's behind its potential recovery. So let's get straight to it. The Dow experienced a downturn due to several key factors, including rising inflation rates, slower than expected job growth, declining consumer confidence, and geopolitical tensions. The Consumer Price Index showed a year-over-year increase that exceeded analysts' expectations, leading to fears of further interest rate hikes. This is crucial because higher rates can lead to decreased consumer spending, which is detrimental to corporate profits. For instance, the latest employment figures showed an increase of only 150,000 jobs in the last month, falling short of the anticipated 200,000. This data often influences market sentiment, as robust job creation is typically seen as a sign of economic strength. The Conference Board's Consumer Confidence Index fell to 100.3, marking its lowest level in over a year. Investors are particularly sensitive to these shifts, as they often foreshadow broader economic trends that could affect corporate profitability. Now, geopolitical tensions also played a role in the recent market slump. Ongoing discussions regarding tariffs on imports from China could have a significant impact on companies reliant on international trade. Investors remain cautious about how diplomatic relations could impact trade and economic stability. However, despite this volatility, analysts are predicting a rebound for the Dow. Many companies within the index have been reporting strong earnings, which can buoy the index. For instance, major corporations like Apple, Microsoft, and Johnson & Johnson have exceeded earnings projections, leading to increased investor confidence. Investors are also watching the Federal Reserve's actions regarding interest rates. If the Fed indicates a more dovish stance or signals that they may pause rate hikes, it could provide the necessary catalyst for a market rebound. The next Federal Open Market Committee meeting is pivotal, and any indication of changes in monetary policy could have immediate impacts on the stock market. Market sentiment can also be a powerful driver of price movements. As investors digest recent economic data and corporate earnings, a shift in sentiment could lead to increased buying activity, particularly among undervalued stocks. So, what should you consider before investing in this volatile market? First, your risk tolerance is crucial. Make sure you're comfortable with the potential for losses as well as gains. Then, diversify your portfolio by spreading your investments across different asset classes and sectors. Finally, keep an eye on both macroeconomic and company-specific factors that can impact stock prices. In today's fast-paced financial landscape, staying informed is key to making smart investment decisions. That's it for today's episode of Voro. Thanks for joining us as we explore the Dow Jones Industrial Average's recent slump and potential recovery. We'll keep you updated on market trends and analysis, so stay tuned.